Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show that addresses all your stock-related queries. This is where top market experts can actually guide you through all the stocks in your portfolio. So in case you're here for the first time, the WhatsApp number will be flashing on your screens. That's where you can send us all your questions. Don't forget to mention your own name, location and your contact details when you send us your queries as well. Apart from this, you can also log on to YouTube on our Business Today channel and watch the show live. Along with this, use the comment section there to send us all your questions and we'll be happy to address them for you as well. Today the markets are actually doing better. Remember, the last 2 days, Thursday and Friday, were tad volatile, but the beginning of this new week has been on a positive note. 24,284 thereabouts is what we are having, so inching closer to 24,300 mark. Let's welcome our guest on board. We have Shivangi Sardar joining in from Motilal Oswal Financial Services. She tracks the technicals and derivatives there. Warm welcome to you. Thank you so much, Shivangi, for joining in. Good to see you yet again. I know that there is a big event going to be unfolding in your personal life in just 2 weeks from now. I hope both you and your fiance are absolutely excited. We can't wait to see you getting married and of course getting back on daily calls. But tell us, how are the markets looking? Are you able to focus on markets or on your wedding more?
Thank you so much for the lovely wishes, Sakshi. It's always, feels so warm in your show. But of course, we've been having our time of our lives, planning the big day.
Yes.
And of course, tracking the markets has also been one of the most important things right now. And looking at, the geopolitical tensions, of course, there has been a reflection on the markets. We've also moved more than 2,600 points in the last 4 weeks. So that point can also, not be ruled out that we've had a good rally and some minor profit taking at the higher zones is quite healthy and natural. The good part is that we are bouncing back from the support levels, which is quite
Yes.
positive. And sector specific action is continuing to the extent that market breadth has been very positive
Yes.
across. So we saw that financials were first participating, and then we saw, the IT again taking up later. But overall, there has been buying across, which makes the market texture quite positive right now. Of course, there'll be some sort of volatility which will continue till the time India VIX does not cool off below 15 and stabilizes. So we are going on buy on decline as of now, and we are looking at the psychological 24,000 marks as an important support levels at this zone with higher targets of 24,650 marks for Nifty. Of course, talking
Okay.
about, yeah.
Yeah, yeah, go on.
Of course, talking about Bank Nifty, we have seen that there is outperformance here and strength is likely to continue in the heavyweight private counters. We've seen that the PSU have also started to pick up, but momentum is likely to be there on the heavyweight private banking names. And we are expecting, around about 56,000 levels in Bank Nifty and with the support of 55,000 zone.
Okay, wonderful. So that's as far as the Nifty and the Nifty Bank goes. And I hope all our viewers are taking down all those levels as well for them. We'll start taking some questions, Shivangi, that are coming in for us, and we can keep coming back to the markets for your views on separate sectors as well. Let's take our first question. This is from Kamlesh Narkire. He is joining in on our YouTube platform as our first viewer. Hi, Kamlesh. How are you? His question is on two stocks, and both is from the NBFC space. The first one is Shriram Finance, and the second one is Cholamandalam Finance. He wants to know whether he should be using these dips to buy afresh into both these stocks for the long term. Now, of course, we do know that Shriram Finance, Cholamandalam Finance have had a long history, both positive side as well. But of late, post the earnings, Shriram Finance has been consistently falling. There has been some recovery from the lowest point today, but if you look at the last 1 week, you will actually stretch and see the stock. You would have seen quite a bit of a fall on this one. Also on Cholamandalam Finance as well, if we look at the stock, so 11% of a fall, large part of it has actually come in the last couple of days around the earnings. Your sense, Shivangi, Shriram Finance first at 623 and then we'll look at Chola also.
Looking at both these stocks, actually, comparatively, drawing a comparison between the two of them, of course, Chola Finance is more stable than Shriram Finance. Of lately, there has been quite a lot of volatility there in Shriram Finance.
Yeah.
But if we want to go for some financial names, one could focus on, some of the heavyweight banking stocks. But if we have to choose between the two, Chola Finance is a much better placed stock. It's just turned from its 50 daily exponential moving average, so making it a good risk reward at these levels as well. So we could roundabout expect levels of around 1600 immediately, and then 1650 a little positionally for Shriram Finance, for Chola Finance, beg your pardon.
Okay, fair point. We'll definitely keep that in focus. Next, let's take Ankur Modi's question. Says, hi Sakshi, hope you're doing well. I'm very well, Ankur. Thank you for asking, and I hope the same for you. He says, could you please get me a view on two stocks? One is Protean eGov. This is one of the recently listed stocks, so probably Shivangi won't have very long-term charts here to really study. And the other one is Mankind Pharma. I remember in the previous run-up in the pharma sector, Mankind was emerging as one of the key favorite stocks. It really went up pretty sharply as well. But after that run-up, it's been in a consolidative zone. So let's discuss both these stocks separately. One is Protean eGov and the second one is Mankind Pharma. The question is that Ankur wants to invest in both these stocks at the current levels.
So, of course, protein has been a new stock, and there is not much of a data here. But of course, from the beginning, we've seen that it has consolidated quite a lot in the last 2 to 3 months. And looking at, of course, Mankind, we've seen that pharma stocks have been quite in a lot of momentum, and Mankind has been one stock which has moved in the last 2 months with a good pullback move. And we've seen that even from the last 5 to 6 trading sessions, it has consolidated at its higher band and getting ready for a steady up move. Of course, this is going to take a little patience because this stock is one which moves slow and steadily. So one can be in this stock with a little bit of patience for around about 2700 levels and a support of 2500. So
Okay, got that. I hope, Ankur, this has answered your question. Let's take another one. Avdish Thakur also logs in on our YouTube. Hi, Avdish, how are you? And I hope you're doing well. His question we'll take, this is on two stocks again. IFCI Limited is the first question, and the second one is IRB Infra.
support based buying in the last 1 or 2 weeks, and there we've seen recovery is on the cards, but there has been some sort of lack of follow up, which is making the upside capped.
Yeah.
Even if we look at the stock of IFCI, we've seen that this one has, of course, today it is in action, but of course, this stock has also been in the downtrend from the last around about 8 months.
Yeah.
So, little strength in both of these stocks. Recommendation would be to avoid this and
Okay.
get into better momentum stocks.
Okay, any suggestion there for a better momentum stock, Shivangi, from your end, if one is to avoid both IFCI and IRB? I hope you've taken that down, Avdesh. Both these stocks are avoidable at the current levels. Any momentum stock that you can guide as an alternative, Shivangi, here?
Some of the pharma names are doing quite well. One can look at Lupin to diversify with it. One can also look at defensive space like HAL, which has witnessed excellent short covering move. And along with that, one can look at heavyweight private banking names, which are looking quite positive. Axis or ICICI are on the cards. So one can plan and diversify in such kind of a market where we are seeing pockets of stocks moving in tandem.
Okay, got that. Let's take another question then. This one is from Vinu P. And Vinu says, hi Sakshi, I want to know on banking stocks like Karnataka Bank and also Federal Bank, if I want to invest in both these banks as a fresh entry for medium term. So let's take it maybe 6 months to a year. Perspective is what he's looking at. Karnataka Bank and Federal Bank. Anything here that you would like to bet on?
My recommendation would be, of course, to be diversified in the financial space. And of course, strength and momentum is likely to be more in the heavyweight private names, as I mentioned. But of course, there'll be some sort of aftermath in the smaller banking names as well. So sector tailwind will also obviously be there. But looking at Federal Bank and Karnataka Bank, both the structures look quite similar. But on a long-term basis, Federal Bank is looking much more promising because it's been quite stable, from the last few months, and it has consistently respected its upward sloping channel. Year-on-year basis, also stock has consistently moved upwards in the last 5 years. So definitely for a longer term pick, this one is better placed, and one can actually look at targets of 220 on a positional basis to keep trailing your stop losses ahead.
Okay, got that. Hope Vinu, this has answered your question well. Let's actually take some questions on our WhatsApp also that are coming in. We have this question from Mohit from Ludhiana. Hi Mohit. He says, I have got 500 shares of Restaurant Brands Asia that operates Burger King, and I have been holding this stock in my portfolio at around 106 levels. My time horizon is 3 years. Could you please guide me on this? Okay, Restaurant Brands is currently trading at 81, so of course you have been sitting on some losses here. Let's actually look at the kind of charts that we can study on this one. Of course, if we stretch the charts a little bit, let's actually see how long the stock has been, how has been the stock performing over the last 1 month. There has been a smart recovery or so, 26-27% odd. But let's look at the last 6 months and see this chart there, 14% of a loss there. In the last 1 year also about 18%, but I think the smart recovery has started to take place from about March and onwards, or middle of March onwards. We have been seeing a reversal of sorts. Should one participate in this upward journey? And for those who are holding at higher levels, what would that mean, Shivangi?
Yes, of course. Looking at the chart structure overall on a year-on-year basis, the stock has, been facing lower top, lower bottom from the last 4 years, and we've seen that this has consistently drawn down wealth. And of course, it's important to understand that a stop loss is very important in both trading and investment journey. So one has to have, these in hand in order to preserve your capital. So I would suggest at these levels, of course, the stock has just started to rebound in the last 4 weeks. So one could wait and watch for around about 85 to 90 zones, but upside still remains capped, and it will require a lot of patience to come to the buying price.
Absolutely. Okay. Hopefully, we'll try and force, keep that in mind as well. Let's look at another question. This one is from Maurya from Bengaluru. Again, there are two questions here. And this one is specifically for the May series, Shivangi. So, it's a very short term that, Maurya is looking at. Two stocks, Tata Power from the power space and Ultratech Cement from the large cap cement basket. Mostly commodities play, power play. How are you looking at both Tata Power and Ultratech Cement?
Of course, there has been a lot of action recently on the cement stock. So, coming to Ultratech Cement first, we've seen that this stock has consistently rallied for the last 2 months, and
Yeah.
it is coming out of its consolidative band of the last 9 months. It's surpassed its previous hurdle zones as well. So, call writers can be seen unwinding here. So, Ultratech Cement looks quite positive at these levels. And of course, when we look at the immediate structure, there has been some sort of profit taking, but overall, it's holding on to the higher zone. So this one looks better placed. And we could roundabout look at target. This stock is going to take time to build momentum at these levels. Of course, risk reward is quite favorable, but for a quick momentum trade, Ultratech Cement would be a better play stock.
Okay, fair point. I hope this is something that you have taken down for yourself. Let's take a lot of questions coming in on our YouTube. So some questions we will try and take from there too. We have this question coming in from Satya. He says, I'm holding Wadi Lal at around 2200 of an average price. Now, I want to know, whenever I try to sell this, most of the experts advise me to hold on and to average. What is the fresh advice of Shivangi on this one? And could you also share a stop loss and a target with me on Wadi Lal? Okay, got that. You actually are celebrating a lot of profits there. So, congratulations to you, Satya. You got an entry at 2200 and now the stock is at 6781. Well, it's a good thing that investors, experts are actually believing in the long-term story of the stock. But we'll try and understand it more technically as far as the charts are concerned. Shivangi, how would you advise? Sitting on considerable amount of profits, what's the exact strategy should one follow? When is the right time to book profits on this one?
Of course, looking at this stock has been performing quite well in the last 4 years.
Yes.
Has done exceptionally well after the consolidation of a long, 10-year band. And
Yes.
of course, congratulations on the profits that you're holding. This clearly shows what holding on to, good stocks on a longer period of time and the power of compounding that comes with it.
Sure.
So, of course, my advice would be to keep holding this stock. This has been a wealth creator in the last 4 years. And immediate basis also, we've seen that the supports are gradually shifting higher. Of course, the stop losses can be trailed higher, and one can, look for, 10 to 15% return in the next 1 year.
Okay, got that. I hope this has helped you out get a greater clarity on what the outlook is on the stock, and I hope you take the advice Shivangi has given you to really follow this one as well. Let's take another question. This one is from one of our viewers. Again, Ankur says, "Hi Shivangi, I want to know from you on BSC, and BSC has a past history of providing multi-bagger returns in the past. So I want to know whether it can continue to give multi-bagger returns in the future as well." So, capital market story led by the exchange. In fact, BSC has completed 150 years of a history as well. We are seeing about a 3% kind of an uptick on this one. What's the suggestion that you would have on BSC? Can its multi-bagger returns continue?
Of course, looking at BST, this has been one of the most important stocks to have in a portfolio. And we've seen that, in the capital market space, this has been a wealth creator since a long time. It has outperformed in the last 3 years, but consistently performed. And we've seen that even in between, any minor declines have been utilized and quickly turned into buying opportunity. The entire awareness about financial freedom and the stock market investing has been quite high, in the country, and the month on month increase in the demat accounts have also been very significant. So, we are quite bullish on this one. Of course, all the disclaimers and disclosures applied. But one can continue holding on this stock for the long period time frame, and we are looking at round about 6,900 targets for BSC, with a support of 6,300 levels.
Okay, fair point. I hope this has answered your question well. Let us take another question. Again, from our YouTube, we will take this. This one is from one of our viewers, Samvit Nageshwar. He wants to know, is it advisable to average ITC hotels and DCX systems at the current levels? Well, Samvit, it would have helped us to really get you your original levels at which you have invested in both ITC hotels and DCX systems to guide you better. But let's get a fresh perspective on both these stocks from now. What would your suggestion be on ITC hotels? Today it's nearing 200 odd mark, 1.5% higher, and the second one is DCX systems from the defense pack.
So, we've seen that recently travel and tourism stocks have been quite a lot in momentum. And of course, ITC hotels being a new stock, but it has made the buzz even after, its demerger. And we've seen that this stock has, consistently moved upwards in the last 6 to 7 odd weeks. And we've seen that minor declines can be seen on a week on week basis, but overall, the stock is quite well placed, and we could expect around about 205 to 210 levels here in ITC hotels. Of course, there is a lot of seasonality which works in this quarter, where travel and tourism pack stocks tend to do quite well. So this can be looked out for.
Okay, Fair point. Hopefully, this has helped you out in taking a correct decision there. Let's take the next one. We have this question from Mr. Dasaradhi. He says, Hi Sakshi, is it the right time to buy PCBL at the current market price in my portfolio? I want to know whether the company's focus on expansion can actually lead to stock market price performance as well. So let's get to talk about PCBL. I think in the first half of 2024 calendar year, we did see a strong momentum on PCBL. In fact, all the RPSG group stocks, they were rallying and re-rating also. But we've seen some consolidation at play as well, Shivangi. Now, what's the fresh perspective on Philips Carbon Black?
So, talking about this stock, we've seen that this has been in some sort of a downtrend, and somewhere there has been a little bit of a pressure on the upside, wherein it hasn't been able to surpass around about 440 odd levels. So it has been capped in the last 15 odd weeks, where 440 is not a level which is being able to surpass. So that becomes the immediate hurdle level for this stock. And we could look at a support of round about 375 to 360 odd levels positionally.
Okay, fair point. I hope this has helped you out in taking the right decision too. Next, we have Momita from Kolkata writing in. Says, Hi Sakshi. Hi Momita, hope you're doing well. Says, I want to know, with the current geopolitical situation, should one actually hold on to cash till the markets really stabilize? Or if investing is advised, I want to know on one stock, that's Angel One. Is it good to look at the stock? I already have it at 2500. Can I average at the current levels is what she's asking. So one, a view on the markets looking at the current geopolitical tensions, and the second one on Angel One.
Of course, we've discussed about the capital market stocks and how it's looking quite positive for the near next, long term. And of course, all the disclosures applied. We are very positive on the entire capital market space. So one can, diversify and plan their trades accordingly.
Sure. Okay, I hope this has helped you out in taking the right call there. Let's take another question. This one is from one of our viewers. That's Ratna Prabha. Says, Hi Sakshi, good afternoon. Good afternoon to you, Ratna. Hope you're doing well. She says, I've been holding on to Reliance Industries for the past 1 year. 15 shares at an average price of 13.98. I want to know, finally, when the stock has started to move, can I now average more of my positions? So, yes, it's back above 1360 odd levels. So a strong move, 4.6% higher. I don't even remember the last time I saw a 4.5% move on Reliance Industries. Of course, from the time the bonus got announced, the stock has been a big laggard. Therefore, the question is now, for those holding at 1398 itself, can one average at the current levels?
Of course, today's uptick in Nifty can be contributed a large part to Reliance.
Yes.
We've seen that there has been a consolidation breakout here. After a really long time, the stock has showed price and volume surge both consistently and with a positive divergence on the RSI front. So overall, of course, there has been a higher volatility and geopolitical tensions on one side of the market. But the other side, we have seen heavyweights have been holding on as strong pillars of the market, which haven't been, sinking it down. So overall, heavyweights look quite positive, and Reliance is one stock which has been resilient in the last, 4 weeks. And we've consistently seen good rollovers also from the last two series. Even April was quite impressive. So I would recommend continue being here and trading the stop losses ahead. Of course, this is one stock which should be a part of your portfolio as well. And of course, diversify it too. But 1400 is next what we're looking at for Reliance.
Okay, got that. I hope this answers your question well. Let's take Vivek's question from Kerala. He says, Hi Sakshi, how are you? And I also want to wish many congratulations to Shivangi. Thanks, Vivek. We'll pass on those wishes to Shivangi from you. He says, I have bought Tejas Networks at 840 and right now it's slipped to 770. It looks like the stock could be headed down because of the earnings. What would your suggestion be on Tejas Networks?
Thank you so much for your wishes, Vivek. And looking at the chart structure for Tejas Network, we've seen that this stock has consistently been on a downtrend from the last 5 months. Even though there has and positionally 850 is the resistance that we're looking out for.
Okay, fair point. I hope this has answered your question, Vivek. Let's take Vinita Gupta's question. Vinita wants to know on two stocks again, Shivangi. One is E-Pack Durable. She bought this stock at 406. The second one is Synergy Energy, and this one she bought at 462. Okay, let's look at both the stocks there to see how the share prices are moving. I think Synergy Green Industries, that's the one she is talking about, at 514 currently. The stock is up by 5.5%. She bought this at 462, so she is holding on to the profitability figure. At E-Pack Durable, if we pull up that stock as well, to see how the stock price is moving. 363 is the current price. Here she bought it at slightly higher level of 406. Any suggestion on both of these, Shivangi?
Looking at both these stocks, of course, the volumes are a little thin, but overall, we've seen that there has been some sort of slow and steady recovery from the lower levels after dampening in the last 4 months. This has quite a lot moved with the market. So, seeing at the correlation, we are expecting a little bit of stability here and a pullback from these levels. But overall, looks quite uh, fizzled out in momentum. So this both of these are going to take a lot of time to again revive to the levels above their key exponential moving averages. I would advise to uh, not get into these stocks and get into the momentum heavyweight pack which is driving the market currently.
Okay. Nagesh Godri writes in. Hi Nagesh. He says, I'm from Karnataka. Okay, Nagesh. And your question is on Geo Finance, you write in. 25 shares at the rate of 325. I need a long term view on this one since the stock price has fallen. But what's the outlook on Geo Finance? Shivangi.
So Geofinance did make a lot of buzz when it came into the market. Overall, it
Yes.
has been a very favorite stock for most of the people. Of lately, in the last round about 1 year, it hasn't performed that well. It has underperformed, but overall, we've seen that there has been good recovery from 200 odd levels. So this could be, one of the most important financial name stocks. Of course, it's still, making its mark, but definitely hold on to the uh, stock in a portfolio point of view. Of course, trading point of view, this stock is not the one which you would look for.
Yeah.
But for the long term perspective, this stock is getting ready for around about next levels of 300 odd levels with a support of 250 zones. So keep trailing your stop losses ahead so that you protect and preserve your capital.
Okay, got that. I hope this has helped you out. Next, we have this question from one of our viewers. That's Momita Sarkar. She says, I want to make a fresh entry in Interglobe Aviation for 1 year. Can I do that?
Of course, with the kind of expansion that Indigo has gone through, with extensively going on to the international segment as well, and with the kind of improved quality operational things that we've seen in this sector has been quite high. So, and of course, travel and tourism pack has been on the rise from the last 1 year. Even seasonality wise, these quarters tend to be quite good. So, even in the short term as well as the long term perspective, Indigo is quite well placed right now. And we would recommend a buy at these levels as well. Risk reward is quite favorable. It is just turned from its key retracement levels. So, of course, recommending a buy here. Now, immediate, we could look at 5,600 levels, but positionally, we could look at 5,900 levels for Indigo, for a 1 to 1.5 year perspective. We've seen that aviation stocks amongst them, this is one of the best out there. So, of course, this should be there in your portfolio.
Of course, this should be there in your portfolio. We'll take the last question now from one of our viewers. This one is from Vandana Sachdev and she's from Noida and she wants to know on Shriram Finance again. She wants to know, she already holds a position here at the rate of 478. She's a long-term investor, she says, but she wants to know whether she can hold on or should she move her position to some other bank or NBFC stock. After the recent decline, she's now wanting to rethink about the position that she holds, even though her purchase level is 478 and she's still in profits. Is it a better idea to take the profits and switch the money somewhere else, Shivangi?
So on a year-on-year basis, Shriram Finance has done quite well in the last 5 years. So if you're a long-term investor, Vandana, this stock could be there in your portfolio and still make money even after the short-term volatility and declines. But overall, if you are looking for immediate gains, one could focus on the momentum trades right now, which is the other heavyweight banking stocks. If it's an investment call, you can still keep holding Shriram Finance with a stop loss, which has to be trailed ahead. But if it's a trading call, one could focus on the immediate momentum ones, which are the private heavyweights banking stocks.
Okay, fair point. While the markets are soaring higher, you can actually see 24,340 now. We are 300 points strong, and even on the Sensex, we did see 1,000 point coming in. So the going is pretty strong at this point in time. Shivangi, towards the end, could you help us understand how are you looking at the markets at this level then?
Yes, absolutely. Markets have, done quite well from the time we started the show. And we've seen that the texture is quite positive, remaining intact. So 24,650 is what we're looking at. Of course, we could trail the stop losses ahead to 24,100 marks. And one could continue the buy on dip strategy over here. Of course, the expiry that we're looking at is in the next 2 days. So one can focus on doing a bull call strategy spread as well to play this upswing.
Okay, fair point. Well, we'll thank you then, Shivangi, for being with us on the show today to highlight all the key points to remember when it comes to markets and the trading at the current levels, and also for answering all those questions patiently for all our viewers as well. So from our entire viewers, Business Today television team, we wish you a fantastic wedding and a married life ahead. We will be seeing you on the other side for sure, but let's see if you can make out time next week also before you go ahead for your festivities yet again. Thank you so much for being with us on the show. All right, viewers, time to wrap up the trade on daily calls today. We are going to be keeping a tad shorter session, and 1 o'clock we have a special session and conversation on Market Masters with Gautam Shah. So stay tuned for that. In case you're still wondering whether this recovery in the markets will be sustainable or the actions on the geopolitical front between India and Pakistan still pose as a key risk to the Indian markets and this upward recovery in the markets, then all the answers will be given to you in our chat at 1 p.m. with Gautam Shah. Stay tuned for that.
The IMF and World Bank serve critical roles in the international system.